I think it started to break down with the Japanese in 1980s. I think the Japanese had a crisis. The crisis was the digital revolution. Computer chip came out, Intel, Microsoft. The Japanese dominate analog electronics. The world shifts to digital electronics. Their exports start slipping. And as the world moves to the computer age, the Japanese economy weakens. Their reaction is the central bank starts to intervene. They're a closed system, an authoritarian, a single government in a closed system under economic crisis. And so they start buying everything. Price discovery disappears. Asset inflation goes through the roof. Real estate in Tokyo goes through the roof. Zombie companies start to manifest themselves. The economy freezes. And that's the first place you see the breakdown of the Fiat Standard. The interest rate goes to laughable numbers, non-competitive, and it's like this self-referential closed system. It doesn't make any sense whatsoever. And America looks at it and we're, in America, we have 18% interest rates, and so the Japanese response was central bank intervention, and they were the first major country. And maybe not the first, because I'm not a student of China and every other country. I just noticed in Japan. Then what happens next? America has the Reagan Revolution, and so Reagan and Volcker really define the game plan till '88. And we have the fiat system lurching toward normal. You had savings accounts that yield 6, 7, 8% interest. The way you know that there's a semblance of normalcy is checking accounts yield 0 and savings account yield 8% interest, and the banking system offers those things. A savings account allows me to save money. If the money supply is debasing at 7% a year and the savings account is yielding 7% interest, there's some hope. America started to rise. The rise of the Western Europe, the US started to prosper from digital productivity. And Clinton inherited this very healthy economy from Reagan, and Clinton was kind of a moderate. And we went on to 2000. And then what happens in 2000? The EU. Okay, and before the EU, you had all these different currencies, and when you crossed Europe, every currency had to have its own interest rate and its own bank, and they're competitive with each other. And if a currency prints too much, their currency crashes and no one's going to save them. And so there are interest rates. You go look at the interest rate. They're real interest rates. So it's like a 7%, a 6%, an 8%, right? There are consequences to irrationality under the Fiat Standard when there's 100 central banks and they're all competing, right? And you talked about in your book, you're like, there's all these central banks. The US as the currency swap it wasn't 87 or 90% of all currency. It was like 30. You can see this manifested itself in 1980 because when you had different currency systems, the Chinese, the Japanese, the Indian, South America, the German bank, the UK, the French, the US, they're all different currency systems. And the US had to raise their interest rates, and there are consequences to our inflation. We had to take interest rates to 18 or 19% to actually fix that problem. We couldn't print money with impunity. If you print $1 trillion in a $10 trillion economy, that's a problem. And if you print $1 trillion in a $50 trillion global economy, that's 2%, right? That just goes away, right? So in 1980, you couldn't do it. And we started lurching toward globalism, and then the EU was this big change. And what happened? Well, the EU came in with a light hand, but it was a massive increase in governmental authority and fiat authority, because now you had an EU central bank. In my opinion, the biggest beneficiary of the EU? When the EU formed, the biggest beneficiary was the US. I don't think it's very constructive for the community to focus upon Bitcoin replacing the dollar. It's a crypto anarchist idea. I could be more supportive of Bitcoin replacing the Zimbabwe dollar or the Venezuelan bolivar. Like in a government where all the institutions of government are broken down, an utterly corrupt, dysfunctional government where they can't function anymore. And that's a hyperinflationary environment. I'm probably more supportive of that, right? because there people are going to starve to death. So there's billions of people in collapsing economies where the currency is collapsing. There's some kind of stable currency, it might be even a stable coin, like the US dollar sitting on a crypto rail backed by Bitcoin, which might be what Tether is or what something is. I think that that's probably got a value, right? I mean, that's probably got a place. But in the United States and in Europe, as the fiat currency expands, it maintains its place as a medium of exchange and a lawful currency, and as currency, I mean, as legal currency. And it will, and we should hope it will, because I don't think anybody wants, France or Germany or the US to look like Zimbabwe, right? I mean, those are literally countries where the rule of law and the right to property break down. When the rule of law and your right to freedom of speech or the right to life, liberty, and property break down, you've got a situation of true anarchy. And then I suppose if you're a crypto anarchist and you support reinstalling free speech and right to property via crypto network, that's ethical. Bitcoin is your best bet. Bitcoin is going to be running transaction fees of less than 1%, 2% would be high, like whatever it is, it's going to be nothing compared to the cost to acquire and store and maneuver gold. Gold is elitist and gold is antiquated because I can't move $37 worth of gold, from point A to point B to pay for an Uber ride. I can't fund with gold. Gold is not bankable. Gold is slow money. With Bitcoin, we're on the verge of a world where, you'll have $1 trillion of Bitcoin. You can plug 1 billion consumer accounts into it, and you can offer people the ability to borrow against the Bitcoin at 4% interest. By the way, JP Morgan offers you securitized loans up to loan to value 50% against conventional assets at LIBOR plus 50 basis points if you're an institutional customer. You could get LIBOR plus 200 basis points if you're a consumer. So you're talking about 2% interest or 3% interest. So in a world where a major bank were to plug into Bitcoin, there's no reason why we couldn't get to a point where 1 billion people could borrow money against Bitcoin at 2% interest and then never sell the Bitcoin forever. I think in the next 36 months, we'll see 5% consumer loans against Bitcoin. When's the last time you got a loan against gold? No, and then we're on to this next thing, which is, okay, well, we'll write off gold. Well, what's next? Well, bond indexes? No. So we migrate to stock indexes. I think the free market in the Western world is inventing asset classes to serve as stores of value. And they've been doing them legally and ethically. And the government allows you to create asset classes. I mean, when $1 trillion moved into the Vanguard 500, the S&P 500, the government didn't block that. So I think that the right way to think of it is Bitcoin as a store of value asset class, as digital gold growing to be $10 trillion, and then 20, and then 40.